Today in the grain market, soybeans did fall. There's a big crop out of Brazil. Plus, in China, the demand has slowed somewhat, with the futures dropping 21%, which is a pretty big move today. Just a lack of bullish news is really why you can see that it kind of opened the floor a little bit for the market to slide. But in spite of the price drawdown, the combination chart that combines corn, wheat, and soybeans is still in the same channel it had been in since January 1, and that's still pretty strong. So until that market starts to slide, we don't want to worry about it. But thinking about that, the market is down, given back maybe 3/4 of what the March 31st report rallied on. And so there is some pullback, and this is where it's buying the rumors, selling the fact kind of thing. So that's something that we're going to be watching. Now, implied volatility is down to 14.8%, which is the lowest it's been in quite a while. So there's been a lot of selling of calls and buying of puts on the soybean side. That doesn't mean everything is over, but it's just something to watch. Now, corn was lower as well. The forecast did improve for planting, and so that kind of puts a little pressure on the market. However, it did rally to start the day, but a 17-cent range is still pretty large for something like corn. And I think as traders start to digest the USDA numbers, now we're really going to start to trade the weather until further notice. And so the market's going to be a little bit more vulnerable to volatility. Now, corn these days is really what's leading the grain market. So that's what we're going to be watching that a little bit more closely. Now, the May implied volatility on the option side is down a little bit to 24.3%, which is lower, although historically is high. In my years of trading in the grain market, 24% is still pretty strong for corn overall. Now, open interest in options also is falling, but there's been a lot more trading activity for out of the money calls. That's just kind of an indication that maybe people still are looking for perhaps another move higher down the road. So that's just something to watch. Now, wheat did retreat as well. I think the spring wheat areas did get some rain. Futures did give back Friday's gains. And technically speaking, all three exchanges are kind of in a different space. So we're down for Kansas City July contract, we're sideways for Chicago July contract, and we're up for the Minneapolis September contract. The May volatility for Chicago is also down to 25.5%. From 29.5% when the market really had a big move, but it almost seems like it's breathing 5%. If we get a big move, it goes up 5%, it comes down 5%. That's really a big number, but that just lets you know how much volatility is out there. Now, again, overall, we're going to be trading the weather. That's going to be driving the news until further notice, but it will be day to day. I still expect that there's much more ahead, and as the planting progress goes forward.